Hello everyone and welcome to this series of Roundup for July 2022. I'm Deepak and my colleague Lipika is with me for this session. Last 1 month has been very eventful for GST. Taxpayers were analyzing the impact of Supreme Court judgments for ocean freight and secondment of employees, which impacted most of them. We had GST Council minutes, or we had GST Council meeting, which after a gap of 6 months brought in so many changes and they were proposed. We had fifth year anniversary of GST, wherein many conferences were held and tax officials gave an insight of GST 2.0, wherein there'll be a lot of scrutiny, assessments, etc., which would be there. And there were even talks of SOP being released for these scrutinies and assessments. So in this series of the webinar, we'll be discussing on GST Council changes. We'll be discussing what all legal changes, clarification, rate changes, and compliance changes that have been brought up. We'll be discussing other recent changes that have come, recent news which are there on GST front. Way forward for ocean freight, because this GST Council minutes did not discuss them, synopsis, and then live Q&A, including the Q&A we have received before this session. Beginning with the GST Council changes that have come. Firstly, law-related changes, and one of the more favorable changes that have come for inverted duty structure taxpayers. So there's a change in the inverted duty structure formula which has come. The change is predominantly in line with the observations of the Supreme Court judgment in the case of BKC footsteps. And the formula of computing the refund has been substituted. Let us understand what the change is. Till now, when the refund was being computed for inverted duty structure, they were computing whatever ITC is attributed on inputs, mind you, ITC attributable towards inverted duty goods and services, less tax paid on inverted duty goods. In the VKC footstep judgments, they observed that the formula has an anomaly, that it would first consider that the entire ITC of inputs has been used to discharge the tax liability. And therefore, this formula was restricted to net ITC proportionately derived, less tax paid. Now what they have done is they have reduced this output liability on inverted duty rate of goods and services by the component of input divided by total ITC on input and input services. What this would do is, this would only take proportionate tax payable on inverted duty structure and therefore increase the refunds for IDS. Now, one interesting point to note here is whether this formula would be applicable for past period or not. But before moving to that, let us firstly understand, or let us say this formula which I spoke in, I'll say very technical terms, how this would impact through a practical example. So practically what was happening right now is, if let us say there was an inverted duty structure wherein tax payable was 2.5 lakh in this example, ITC on input services were there. So when the proportionate ITC was being reduced, the entire tax was being reduced. In this example, 2.5 lakh. Which meant that firstly, ITC of inputs, 3 lakh is attributable towards that 2.5 lakh. So refund amount was coming only the difference between tax payable and ITC on inputs, 50,000, and the balance was much higher. In this case, the entire ITC of input services remained. Now what change they have done is, they have considered that 2.5 lakh of output liability would be some amount of ITC on input services would also be used to discharge that liability in the proportionate of whatever ITC of input services and inputs is. And therefore, if you see the refund amount has increased, why? Because the tax payable reduces to some extent. And therefore, the closing balance also reduces. They're granting you refund of inputs only, but while computing tax payable, they are reducing whatever ITC of input services has been used for that payment. So this, in that context, is a positive news. I parked one question in the previous slide, that whether this formula would be applicable for past refunds or not. And that's a very interesting question, because the provision has been introduced, it has been substituted, point number 1. And substitution in various judgments has been considered to be clarificatory. There are observations of Supreme Court which have categorically stated that a formula does have an anomaly. And lastly, if you see in this context, whatever refunds are being filed for future, there's also a question of retrospective versus retroactive. But yes, this would need to be seen of how the I'll say, because several things are derived from portal, how the portal permits it for this thing, or whether clarification is issued. But the formula should logically be applicable in multiple factors for refunds filed post this period, even though they relate to the past period. But yes, I'll say typical analysis of all these things together would be needed for this. Moving forward to the next change which I have brought for refund. In some cases, practically the taxpayers were facing a problem that if, let us say, they had received an erroneous refund and they were aware of that. So you must be aware for the past, there have been several cases wherein for advance authorization holders, they also claimed output stage refund, and many investigations were carried out by DRI, DGGI. There may be other cases also wherein the taxpayers, after receiving the refund, realized that I have received this refund incorrectly or in excess. In that case, taxpayers were more than willing to return the refund amount. But practically, what we saw was there was no provision for the officers to allow recredit to them. There was also a High Court judgment which permitted that recredit should be allowed. But again, as I mentioned, the officers were facing this challenge of absence of provision. Now they have introduced a rule that if the taxpayer returns erroneous refund by himself and he returns it with applicable interest and penalty, then PMT03A would be issued and therefore recredit would be allowed. They have also issued a circular that presently this entire process would be done manually. But as I discussed, at least it gives some option to the taxpayers or the officers to get this recredit back once they're returning this erroneous refund. One important and interesting point is that they have said that refund would be recredit would be allowed only when that has been paid with applicable interest and penalty. Now, there's no interest provision for erroneous refund which has been granted. So there is expected to be another round of litigation that the department may say unless and until you pay interest and even probably penalty under section 74, they'll not return back they'll not give recredit, and taxpayers saying that only basic amount is returnable. Next amendment which has come is in 89.4, and we also have some questions on this which we will be taking towards the end. But understanding the amendment, while claiming refund of input stage for export of goods, they have said that the export turnover would be considered as lower of FOB value in shipping bill or value declared in tax invoice or bill of supply. There was some internal circular or clarification, probably by CAG, which had taken up this point, but this point was never there in the law. So now they have made it part of the legislature, and they, in their wisdom, they believe that the refund computation in the turnover, when you take export turnover, because the formula says export turnover divided by total turnover into ITC, export turnover should be considered as a lower of these values, and accordingly, refund is to be computed. Now, an important point here is that once the export value is reduced, the total turnover value would also be reduced proportionately. Because what we saw in the past is that the officer, while they were happy to reduce the export turnover value, they were not willing to reduce the total turnover. And there's a circular 147, which was issued in 2021, which clarified that if in the refund formula of Rule 89.4, if you are reducing the export value, you should also reduce the total turnover accordingly, because numerator and denominator should go hand in hand in that context. Moving forward to further changes, there's an additional declaration which has been required on the invoice. This is applicable for all taxpayers who cross the threshold for e-invoicing in any year. So presently the threshold is 20 crores. So any taxpayers who has that turnover of that and who's issuing any invoice which is not an e-invoice. So let us say some categories, GTA, banks, etc., have been exempted from issuing e-invoice. So they're required to declare that our turnover is above this limit, but we are not required to declare this invoice. The logical reasoning of introducing this provision is that many a times the recipients are now aware enough that they download the entire list of taxpayers on whom e-invoicing is applicable, and then they match whether they are issuing e-invoice or not. So in these cases, in these category of person, because they are legally not required to invoice, that same declaration comes on the invoice to avoid any confusion with the recipients. The next change is vis-a-vis, again, another change vis-a-vis refund. What change they have brought in, and this is more related to interest, and that is why we have covered later. They have said that the refund application would be deemed when you are, which would be later of, so sorry, I'll restart. If there is any mismatch between shipping bill and GSTR 1, till the time taxpayer does not make that correction in this mismatch, refund application would not deem to be filed. So till now, what happened was GSTR 3B is considered as refund application for output stage refund when you are exporting goods. And usually GSTR 3B is filed by next 20th. However, in case of mismatch, the automatic refund process does not get triggered. And if you saw legally, the interest provisions would have started from the date of filing of refund application after 60 days. So what they have done is they have effectively said that if the mistake is of a taxpayer, the interest provisions would not start till the time that mistake is corrected. Which is, again, I'll say in that context, a logical thing only. Next, this is another important export-friendly measure which has come. For several exporters, they get scripts are generated, and they are not able to use it, they sell it. So in this case, now they have brought in a provision that ITC reversal would not be required under Rule 42 and 43. So because these duty scripts, they were considered as exempt turnover, ITC reversal got triggered. And just to share with you, practically in many audits also, it was seen that the tax officers were raising this point. So now they have clarified that they have brought an amendment that this reversal would not be required. Coming to another very important change which has come through this GST Council meeting, which is relating to refund, is extension of limitation period. So just to share with you, there were many judgments which are coming of High Court that the Supreme Court suo motu order, which extended the limitation period, would also apply to refund proceedings, but department was disputing that. So this confusion was going on. So again, another positive step from the government side, they said, let us put an end to the confusion. This period of 2 years, they said, from 1st March 2020 till Feb 28, 2020, this would be excluded from your refund proceedings or for filing refund applications. They have also said that would also be excluded for passing orders for erroneous refund. So if any erroneous refund has been there, they want to issue a show cause notice, pass an order, it would also be excluded. But for taxpayers, what is more relevant is that they can file refund applications. So just taking a practical example of this, what this means for the taxpayers. So if, let us say, you had paid some incorrect tax in July 2018, 4 years back. So usually your 2 years of reclaiming refund would have expired on July 2020. But because this period of March 2020 and Feb 2020 does not get included, your period gets extended to that extent. And you can even file refund now. So in that context, it's a very positive step. And taxpayers who have been finalizing GSTR 99C, realizing that some excess tax has been paid, or otherwise also several legal judgments coming which makes them realize that this tax was not payable and they have borne the burden, they can apply for refund even for past periods in that context. Another extension which they have said, and another this is important. So for normal period of limitation, where the taxpayers had not conducted any fraud, the period of passing orders in that context was December 2022, which was expiring this year in that context. Now they have extended this period till September 30th, 2023, which would mean that you would see many audits going on, show cause notice being issued, etc. And for normal period of limitation, they can issue show cause notice right up till June 2023. So next 1 year, they also realize that they have not gotten time to conclude these issues, and therefore they have sought this extension for themselves. So now just taking a tabular format of how till what period, because I mentioned normal period of limitation, and many taxpayers now have a question. That was 17-18. Till what period can they act? Is it open, or what period can they come back? So for the importantly, under provisions, the period started from date of filing of annual return and not from the relevant year. So for 17-18, the date of relevant year due date was 31st January 2020. So they can issue show cause notice right up till June 30th, 2023 for normal period. And the order would come for September 30th, 2023. And if you see extended period, that usually is again another 2 years. So you can consider 2024 is the period then till when they can issue a show cause notice for extended period. For subsequent years, for normal period of limitation, again for 18-19, they have period till 30th September to issue show cause notice. For 19-20, they have till December 31st. Because again, there was not much gap in this context in filing of annual returns for these 2 years. And for 2021, the period for issuing a normal show cause notice for normal period is November 2024. So ample times the department has to issue show cause notice for all these years. Next amendment which we'll be discussing is the amendment which has come in section 50 vis-a-vis interest provisions. So vis-a-vis the Finance Act 2021, they had proposed an amendment in section 50 for interest, and the amendment has recently been made effective also. So what the amendment states is that it says that vis-a-vis ITC, because there was no provision to levy interest on ITC, it says it would be applicable, interest would be applicable only when ITC has been wrongly availed and utilized. So earlier, again, there were confusion. The department was saying even though wrongly availed, they can be interest, utilization was not mandatory. Or if you saw the law, there was no provision only, as I discussed. But now they have brought in a provision. They made this amendment retrospective. Therefore, from July 1, this provision gets applicable. And only if you have availed and utilized wrongly, or whenever you utilize, only then the interest would get triggered. Here, another important point to note is that the interest rate, because if you must have known or heard that the interest rate was 24% for ITC incorrectly availed. Now, from 1st July onwards, only this interest rate is 18% only. So again, they made a retrospective amendment to reduce the interest rate also for ITC. An important question in this regard is when they say ITC wrongly availed and utilized. So if in this example, I've taken an example to make a point. In this case, if let us say you avail ITC wrongly in June 2020, you have not utilized it. You utilize it in August 2020. So firstly, it's clear that till June to August, no interest would be leviable. From August 2020, the interest meter would start. Let us say this in September 2020, the ITC was restored. When the ITC is restored, the balance is again more and there is no utilization again. In November 2020, you reverse the ITC suo motu. So till what period would the interest be applicable? Would it be applicable from August 2020 till November 2020 or only till September? Because the benefit which you obtained was only till September. And we believe that this confusion, the rule in that context is not very clear to in that context state for till which period. And in this context, the judgments under Australian law might support interest leviability for a smaller period. Now moving to the next part on the clarifications which have come vis-a-vis the GST Council minutes in this regard. So just quickly running them through. Firstly, they have clarified that even though you are supplying some goods at concessional rate, so let us say you are procuring goods at 18% and because of some concessional rate notification, your supply is at 5%. So in this cases, they have clarified that because at the same point of time, you have two different notifications, refund would be available. However, they are silent on whether refund would be available if, let us say, the rate changes subsequently, or let us say some of the inputs are higher than the output change. So if let us say you have 5 inputs, 3 attract same rate, 2 attract a higher rate. So all these points are not clarified by the circular. Next, they have made a clarification vis-a-vis deemed export supply. So just for all the deemed exporters, you must be aware that for claiming refund, you have whenever let us say you are procuring some supplies and you wish to claim refund of that. The portal was designed in such a manner that you had to first claim that ITC. When you apply for the refund, the ITC was reversed and therefore you could have claimed refund. This was also recently clarified by a circular. But now the confusion came that if you're claiming ITC with the other provisions, let us say section 70, section 17 for reversal of ITC, or in the refund formula for export, whether all this ITC would be computed or not. And they have not now clarified that no, this is only for the purpose of applying refund that you avail ITC. Therefore, this would not actually be considered as ITC availed. So you ignore them for section 17 or for claiming refund under rule 89, etc. That formula. Moving forward, again, as I mentioned, GST Council brought in many changes and clarifications in this time around. One important clarification was vis-a-vis employee-related expenses. So they made two clarifications here. Firstly, they said that if the perquisite is provided under contractual agreement, that is not leviable to GST, which is the welcome step, because some advanced rulings were saying that even though you are providing a perquisite, that employees are related parties, therefore you need to levy GST on that. In that context, this clarification is a welcome step. However, we believe that they have not discussed two different points. One is, if let us say you are providing FOC perquisite without contractual agreement. So let us say you take employees for offsite. You often provide tea, coffee, etc. within office to employees. All these are never part of a contractual agreement. But these are perquisites or these are benefits which are provided to them. So whether those would also be considered or not. And again, one would need to see here what the meaning of perquisite is, what the circular is considering. But yes, this point was not considered. Secondly, another dispute which is going on is, if let us say there is a recovery at concessional value, whether the circular would also apply to that, and therefore no GST would be payable, or GST would be payable at a nominal value, or some advanced ruling have stated GST would be payable at open market value, how this would be interpreted. There's no clarity on these points in the circular. So one, of course, would have expected that if government is issuing a circular, all the points together could have been clarified so that there would have not been confusion in this respect. Another important clarification which got issued was vis-a-vis ITC on expenses that are incurred due to statutory obligation. And on top of the list comes canteen, which is being required to maintain in a factory which has more than 250 employees. So they have clarified, and because some advanced ruling interpreted that there is a proviso under section 17(5)(b), which says that if there is a statutory requirement, you can get ITC. But some advanced ruling were reading it narrowly with only one subclause. So the circular clarifies no. They refer to the GST Council meeting, the intent of the proviso, and they said that it is to be read with all the provisions, meaning thereby that, as I discussed for canteen, if there is a statutory obligation, ITC would be eligible. Moving forward to the next clarification which has come, and this is vis-a-vis the demand and penalty provisions for fake invoicing. So you must have read in the news time and again that these fake invoicing, the department is getting stricter with them. AI is helping them to catch them. So now, even when the department proceeds with these taxpayers whom they believe are involved in fake invoicing, what is the SOP? Under which provision should they proceed? And there were different departments were following different practices, and taxpayers contending that this specific provision is not applicable to me. So in this context, the circular is very helpful. That discussed different scenarios and stated that in this scenario, this penalty provision would be applicable or would not be applicable. Therefore, giving clarity to officers, field officers, and also to taxpayers in that context, that what is the if departments is contending something, what are the implications on me? So in this case, let us say A has been alleged to issue a fake invoicing without supply to B. In this case, they have clarified that because there is no supply, provisions of 73 and 74 cannot be invoked against A. A would be liable for penalty, or penalty would be proposed under section 122(1)(2), which says that supply of goods with supply or issuance of invoice without any supply. But yes, 73 and 74 section cannot be invoked. Moving further, let us say A issues a supply to B and B utilizes it, and therefore he supplies some other goods to C, which is an actual supply. In this case, A we already discussed. In this case, B has availed ITC because he did not receive the goods as a contravention of section 16. Therefore, he would be prosecuted, or let us say the demand would be there under section 74. that is availing ITC without receipt of goods, and therefore that is how the officers would proceed against P, in this case under section 74. Then they have also discussed a scenario wherein B also issues the invoice for same goods without making any supply. So vis-a-vis B, they have clarified that he does not make any supply, he does not avail any ITC, because in that context he has passed that on. So therefore, in this context, we would be liable for penalty under section 122(1)(2) and 7. One point which I did not clarified is under both whether he would be liable, because they are two different subsections of the same section, or only one will he be prosecuted. But it seems that because he has made both the offences, they might be proposing to impose both the penalties in this case. That is 122(1)(2) also and 7 also. So these were the changes, including clarifications. Now, moving for rate changes and compliance changes, now Lipika would be taking that forward.
Thank you, Deepak. Hello, everyone. So before we proceed with the rate changes, we conducted a poll. And here is the poll question, which says that will GST rate changes proposed by the council fuel inflation? So meanwhile, the users can also type their answers in the chat box. So sharing the poll results. So 71% says yes, it will lead to inflation. 18% says no, and 11% says not sure. So it can be seen that the main theme of the council was to increase the revenue collections. So moving on with the rate changes. First of all, as presently the services of this renting of residential dwelling is exempt from GST. But now the council has said that it will be exigible to GST if it is provided to registered business entities. So there were several advance rulings which said the contrary of this, that the renting of residential dwelling will be exempt from GST irrespective of the nature of the recipient. Coming to the next point, services by these bodies, say RBI, IRDA, SEBI, and FSSI. So currently they are exempt from GST, but now the council has proposed to make it exigible to 18% GST. Pertinent to note that these bodies, they qualify as government departments, and hence RCM will be applicable on the recipients. Coming to the next change, the council has said that 12% GST will apply on the services of rental of vehicle for goods transportation with operator and where the cost of fuel is included. So after this amendment, the GST rates for the different categories of services will be as under. The services of rental of vehicle for goods transportation with operator and where the cost of fuel is not included, it will be 18%. With operator and where the cost of fuel is there, it is 12%. And without operator, it will be 18%. So it seems that the council has made this change to make it at par with the GTA services. Moving on, existingly, the rate notification provides for GST rate of 5% on the goods transportation services provided by GTA, subject to non-availment of ITC. This was subsequently amended, whereby an option was given to GTA to charge 12% on the forward charge and avail ITC. However, the notification, it remains silent as to when this option can be availed during the financial year or till such period or till when such option cannot be changed. But this time the council meeting has stated the following points. First, the GTA will be given an option to charge 5% under forward charge, but subject to the condition of non-availment of ITC. Also, this option has to be exercised at the beginning of the financial year. But now it will be interesting to see, as you know, that for this financial year, 3 months have already passed out. So let us see how whether GTAs will be able to avail this option or not.
So just one point to add. So there were several other rate changes also which were can be covered, highlighted, which we thought would be more relevant to you. So just to give you an idea of the pool, so many rate changes have come, and some in guise of removing inverted structure. That even though you are, let us say, increasing the rate, eventually the cost of burden is expected to fall on the taxpayers. So in this context, yes, the government seems to, in that context, on the path of, let us say, be it in the name of rationalization or removing inverted structure, that to bring all the rates at par, or let us say at standard rate of 18%. And this might be a first step only. They may also in future bring along with similar rate increases, and therefore the cost of goods in that context may increase.
Also, to add on that these changes will be effective from 18th of July. However, the notifications are not yet available on the domain. So they are expected to be issued in 2 or 3 days. Coming to the compliance related changes, as we know that the filing of return has been simplified over a period of time. However, there were still infirmities relating to the information furnished by the taxpayers uh, relating to interstate supplies and the reporting of ITC in 3B. Now, to ensure this uniformity, Council has come up with the below changes. So, first of all, if you see this table 3.2, so now the council has stated that the details of the interstate supplies and that to place of supply wise made to unregistered person composition and UN holder has to be declared separately, irrespective of the fact that they are coming as part of 3.1 above. Secondly, the tax payable under reverse charge by e-commerce operators and the supplies made by the registered person on which the tax is payable by ECO has to be declared separately. So this is how the table will be there as per the change 3.1.1. Coming to the next big change, which is regarding the disclosure of the ITC. So, first of all, as we know that presently the ineligible ITC under section 17.5, it used to come under table 4D as a presentation purpose. So as a result, many of the taxpayers, they were not disclosing it. So to mandate such taxpayers to disclose the same, the council has come up with this change that the ineligible ITC under section 17.5 has to be first shown under table 4A as ITC avail, and then under table 4B1, which is the ITC reversed. Secondly, ITC on the goods and services not received. So as per the change, it has to be availed first. That is, it will come under 4A5, all other ITC, and then it will come under 4B2, that is ITC reversed others. Then ITC reversed earlier and reclaim, it will come under 4D1. Then ITC appearing in the 2B but not availed, it will be shown under 4B2, that is others, and under 4D, which is the other details. So in eligible ITC as per the time period envisaged under section 16.4, and the ITC restricted due to place of supply provisions will be shown under 4D2. So just for understanding purpose, so say for example, ITC as per the 2B is 10,000 and the ineligible ITC as per 17.5 is 1,500. Deferred ITC, that is the ITC on goods and services not received is 500. So as per the old, as in the old disclosure, this ITC as per 2B will appear in 4A. Matlab, it was coming in 4A only. Ineligible ITC was coming under 4D as a presentation purpose. Deferred ITC was also coming under 4D as a presentation purpose. But now, as per the proposed change, ITC as per 2B will still appear in table 4A. However, the ineligible ITC will first come under table 4A5, which is the others, and then under 4B1, which is ITC reversed. Deferred ITC will come under 4A5 and which is ITC available, and then under 4B2 ITC reverse. So if we see the overall net ITC available, then as per the old disclosure, it is same as A only, but as per the new one, it is A minus B minus C. So in the next slide, we have explained the same in the by way of a mathematical example. So if you see, as per the new disclosure, it will be 10,000, and this is because the ineligible ITC will also be part of this 10,000, but as per the old, it is 8,000. Secondly, ITC reversed 4B5, it will be 1,500, which is the ineligible ITC as per 17.5. Here it is NA. Second, others, it will be deferred ITC, which is 500, and as per the existing, it was not required. So overall, the net ITC available, which will be credited to our e-credit ledger, it will be 8,000, but as per the old, it was also 8,000.
So just taking a minute here again to understand what they have done. So if you see this example, there's no change in net available ITC. You're always eligible for ITC of 8,000 only, that is net of section 17.5 and ITC of goods which you have not received. So even though some ITC it is coming in your 2A, if you have not received the goods, you will not avail that ITC. But what major change they have done is they have mandated that you record all the ITC for that effect, even though ITC which is coming in your GSTR 2A, you record it in entirety firstly in GSTR 3B. And then you reduce ITC which is coming, let us say, under section 17.5, or let us say on goods which has not been received, etc., in subsequent columns. Now, what this would do is, number one, I think this would be a big IT change for companies, because till now, 17.5, it may be getting recorded, it may not be getting recorded, but it might not be coming in form of reports. And secondly, as most importantly for this deferred part, it is till now companies are doing, okay, they are doing reconciliation of what is coming in the GSTR 2B and match it with books to avail that. But now they would have to see what is coming in GSTR 2B, which has not been received, to specifically have a column or have an accounting of deferred, so that to reflect it in the return. And therefore, as I said, it would be a big IT change. A second confusion which would come is, in the next month, how do you show this deferred ITC? Now you have actually received the goods. How do you show it? Because now in the second month, it would not be coming in your GSTR 2A or 2B. So in that context, to take it again or manually adding it with the GSTR 2B balance and showing in the subsequent columns for disclosure purpose that this is what you have received subsequently would be another mammoth task which you would need to be done. So in short, this 3B is, I'll say, another big bomb which the GST Council has introduced, which the taxpayers would have to implement. practically, even though the notification has been issued, they have not on portal made it effective. So again, a practical implication would be it may not be applicable for this month's return when you are filing. It may get applicable only for GSTR 3B, which is filed for June. But even for June, all these disclosures, the IT system needs to be ready for this implementation to take place. And again, if you see, these are the only disclosure requirements which probably they have brought in. Again, it might be due to AI. The notices might be coming because of whatever these disclosures are done. But yes, implementing them would need to be done. Would need to be done soon, and would require several changes in IT system.
Moving on, the council has also proposed changes in GSTR 9. So, first of all, the taxpayers having aggregate turnover up to rupees 2 CR, they are exempted from filing 9 for this financial year, that is 21 to 22. So, earlier the taxpayers, they had an option to report their supplies, that is exempted, nil rated, and non GST, either separately or to report it consolidately under the exempted category. But now, for this particular financial year, that is 21 to 22, they have specifically said that the taxpayers, they have to declare this non GST supply separately, and for the other two supplies, that is the exempted and nil rated, they can either disclose them separately or under the exempted category. Earlier, the taxpayers, they had an option of like they were given an option to disclose their HSN details of the outward supplies in table 17 of 9. But now for the financial year 21 to 22, they have said that the taxpayers having aggregate turnover exceeding 5 CR, they have to compulsorily report the HSN wise details of their outward supplies up to 6-digit level in table 17 of 9. However, the reporting of the HSN wise details of the inward supply still continues to be optional for the financial year 21 to 22. So, while the due date of 9 for the financial year 21 to 22 is December 31, 2022. However, the taxpayers can still consider finalizing their data by September 30, 2022 as the due date for claiming ITC and issuing credit notes, etc., still stands at October 20, 2022. Secondly, it is pertinent to note that the 9 and 9C modules for this financial year, 21 to 22, they are still not available on the public domain. And this was also one of the questions raised by the speakers before this session. So I will now take you through some other changes that have come in the past 1 month. So coming to the first change, so like the taxpayers, they were facing issues of the non-speaking orders due to which their refund claims were being rejected. Now, to overcome this problem, CBIC has laid down certain instructions relating to sanction, post-audit, and review of refund claims. So, as per this instruction, the proper officer has to issue a detailed speaking order for the sanction or rejection of the refund, and such detailed speaking order should include all the facts relating to refund, be it the period, details of the deficiency memo issued, verification, etc. Thereafter, the department will conduct post audit of such refund claims, but that too amounting to more than 1 lakh. And such examination should be concluded within 3 months of the order. Thereafter, the post audit has to be subsequently analyzed by the review branch, and such review should be completed at least 30 days before the time period allowed for filing appeal, which is 6 months from the date of the communication of the refund order. Moving on, the due date for filing of the EPCG report for the financial year 21 to 22 has been extended from June 30 to September 30, 2022. So pertinent to note that the public notice inadvertently mentioned this financial year as 22 to 23. However, the due date for that financial year 22 to 23 is June 30, 2023. Also, the late fee of rupees 5,000 will be applicable on delayed filing of such report for this particular financial year. Here we wish to highlight that this late fee has been introduced for the very first time in April 2022, which clearly indicates that no late fee was applicable for the year preceding to the financial year 21 to 22. Coming to the next change, this is the extension of last date of submitting MEIS. So the last date of filing the MEIS claims for the period September 2020 to December 2020 has been extended till August 31, 2022. Earlier, the date was April 30, 2022. However, this time, no late cut will be available to the exporters. So the exporters are advised to ensure that these claims are filed within this due date. Coming to the next change. So government has been extending this exemption from IGST and compensation cess on the goods imported under various export schemes, that is EPCG, advance authorization, EOU, STP, EHTP units from time to time. But this time the council has proposed to extend this exemption perpetually and to do away with the e-wallet scheme. Coming to the next change. So the period for levy and collection of the compensation cess has been extended till March 31, 2026. However, the council remain indecisive on the compensation period to states, which expired last month only, and it is expected to be taken up in the next council meeting scheduled in the August month. Now I will take you through some recent news on the GST front. So government is considering levy custom duties on the e-transmissions to prevent anti-competitive practices of the big tech companies, and this will also create a level playing field for the domestic companies. DGGI is intending to issue SCN for the levy of GST on the payment made by companies on the account of arbitration proceedings. Commerce Ministry is working to release the new FTP before September of this financial year, and district as export hub scheme will be part of this policy, and this scheme is aimed at improving exports and job creation. India is set to witness a jurisdiction-free GST regime as a part of next set of indirect tax reforms, and the industries are also requesting for centralized registration and audit, especially for the enterprises having pan-India presence. GST Council constituted a created group of ministers for the constitution of GST Appellate Tribunal, and they are expected to submit their report by end of this month. CBIC is said to release detailed standard operating procedures for serving summons and notices under GST to prevent the harassment of the businesses, and this will also ensure overlapping of the notices between the center and the state jurisdiction. And this has been done in light of the complaints of coercion by the tax authorities. Now Deepak will take us through the way forward on the ocean freight, followed by synopsis of this session. Over to you, Deepak.
Thank you. Just winding up the session with 2 points. The first point is on ocean freight. So ocean freight, as many of the news reports suggested, and the taxpayers were also waiting that this GST Council would bring some amendment. So what happened? So we ran a poll question also on this point, that whether their silence is leading to more confusion, and 78% said yes. Because and we'll discuss in the next slide what the confusion is. But yes, there is no clarity on the taxpayers that what to do once the Supreme Court judgment has come. They continue to pay, they stop paying, etc. So just to highlight, on CIF import of goods, the government right from 2017 wanted to collect tax on the freight component, where the supplier is also outside India and the shipping company is also outside India. So they nominated importer to pay the tax. The levy was challenged. It was struck down first by Gujarat High Court in Mohit Mandel's case, and now the Supreme Court also upheld that there cannot be any levy on the ocean freight component. This was a big win for the taxpayers, that whosoever had not paid, the Supreme Court judgment, yes, said that they were right in that context. But now what is the way forward? So many taxpayers, because they're confused whether they should continue paying, avail ITC, because many of them might not be, it not be a cost to them, it might be a revenue neutral thing. Whosoever have paid in the past, what should they do, etc., are questions which are coming. So firstly, for taxpayers, even though something, if it is revenue neutral, they should stop paying in future basis favorable ruling. The idea is because now the Supreme Court has put its stamp, and now the department cannot also dispute that there might be two interpretations. Because again, there was news reports which were there that even after Gujarat High Court, the department DGGI went on with the proceedings or with in discussions on this, that this is payable. So after Supreme Court, there cannot be any doubt. So they should stop paying this GST amount. For taxpayers who have issued in the past, if it was a revenue neutral exercise, you need not do anything. There's sufficient jurisprudence to support that even though incorrectly paid ITC would be available. But for taxpayers for whom it became a cost, or let us say for taxpayers for whom there's a accumulated refund, accumulated trade in that context, they should contemplate issuance of credit note or claiming refund for the past period. And vis-a-vis refund, now I'll refer to the amendment which has come in increasing the limitation period, that the limitation period would also be increased, and therefore they can file refund for much, I'll say, past period, right from 2018 onwards. Recently, a Gujarat High Court judgment has also come post Supreme Court judgment, which has said that the taxpayer had applied for refund and they said yes, refund would be allowed now. One last, I'll say, a term and condition, or let us say one thing which we'll just like to update you, that the possibility of retrospective amendment cannot be ruled out. And that is what the clarity is, what the taxpayers were expecting, that is the government moving forward to it, with not moving forward, what would be the way forward from government side. But this clarity is yet not there. Once this clarity comes, the taxpayers may decide to resume paying, but in the intervening period, they can stop paying. And for past at least claim refund. Now, after such a heavy session and elongated session, the synopsis of this session. So we discussed on the change in the IDS refund formula, that tax on input services would be attributable, and therefore the refund for inverted duty is set to increase. We discussed for the limitation period for refunds that should be excluded, and therefore refund can be filed for much past period. We discussed for the interest provisions which have been made applicable retrospectively from 2017. The interest would be payable only where ITC has been availed and utilized. We discussed on the circular which has come on perquisite for contractual agreement, and similarly a circular which has come on ITC eligibility on canteen and other services. We discussed on a amendment which has been made for duty credit scrips, that their sale would not be considered as exempt supply for reversal. We discussed changes which have come in GSTR 3B in length, and we discussed that yes, that would require many changes in recording of how you record or how you report or how your system generate these reports. We discussed for self-declaration on invoices by large taxpayers. The demand and penalty provision circular issued for that. Exemption of IGST and compensation cess would continue, and if let us say taxpayers are planning their exports, they can plan accordingly. Extension of last date of MES applications also we discussed that has been extended, probably for the last time, but yes, that has been extended. Thank you everyone for joining in such large number.
Thank you, everyone.
Thank you for your time.